if I could ask you each to just introduce yourselves, and then I will ask you to go further. But anyway, Caroline, would you like to introduce yourself first, please?
Good afternoon, everyone. I'm Caroline Langley. I'm Deputy Fund Manager of Quilter Cheviot's Climate Asset Fund. And along with that, I also run discretionary private client portfolios. Initiatives that we're involved with at Quilter Cheviot form into two categories. Ones that bind us to conduct our business in particular ways, like the UK Stewardship Code and the UN Principles for Responsible Investment, alongside others which are more about us amplifying our voice and having a say on setting the agenda. So like the Institutional Investors Group on Climate Change. Thank you.
Thank you. Seb, would you like to explain who you are and what WHEB does?
Yes, of course, yes. Good afternoon, everybody. So yeah, my name is Seb Beloe. I'm a partner and head of research at a business called WHEB Asset Management. I've worked in business, finance and sustainability for nearly 30 years now. At WHEB, I'm head of research. I'm on the investment team. And WHEB is a sustainable investment boutique. We have about 1.5 billion under management in a single global equity strategy that's focused on investing in companies providing solutions to sustainability challenges. And yeah, we're very active. You know, this is all we do. This is all we'll ever do. So we are, you know, we're all in when it comes to sustainability, and we're very active with all the different networks.
Thank you, Seb. Amanda, if I could ask you to introduce yourself.
Hello, good afternoon, everybody. I'm Amanda Young. I'm the Global Head of Responsible Investment at the newly named Aberdeen. I'm like Seb, I've been around for some time, maybe not quite as long, but our focus here has been on effectively two things: how we integrate ESG issues into our investment process and make sure that we abide by things like Caroline just mentioned, the Stewardship Code through our engagement activities. And the other is how we develop more sustainable investment solutions for our end clients.
Thank you. And Mike, would you like to introduce yourself and your reason for being on this panel? And Mike is actually speaking after this, so you'll hear a lot more from Mike, who will give you views on what's coming down the track shortly after this session. So Mike, please, the floor is yours.
Yes, I was a little bit worried when you described this as the last session. I thought they might all disappear.
Sorry.
So I'm Mark Clark. I'm quite old, as Julia's already noted. I run a responsible investment advisory business. I do most of my work more in sort of institutional, asset owner, and policy and regulatory fields. So I will seek to orientate my comments more to the sort of IFA and more sort of retailing market. I actually work with Seb. I've just stood down from the independent advisory committee at WHEB, and I've got sort of fingers in quite a few pies, and some of those might turn up during the session. Thanks, Julia.
Thank you, Mike. Yes, apologies that this is the last of 5 panels. Then after that, the floor is yours, Mike. So just to be clear, Mike, when he says it's an advisory business, just in case anyone hadn't picked up on it, we're not talking financial advisory. We're talking as in IFA, as in sitting down, talking about financial plans with individuals. We're talking about advising companies, policy work, etc., which I would also like you to touch on, Mike, if you would, please, whilst during the course of the afternoon. So let's talk then, starting off, touching on market imperfections. Caroline, could you bring to life for us for a moment, please, some of the challenges facing fund managers in this area? Because this stuff isn't easy. There's information all over the place.
Well, to start with, what gets measured in business gets managed, and sustainable investment professionals like our team at Quilter Cheviot, and no doubt Amanda and Seb's team, we all want to deliver great solutions to our clients and our customers. Now, I started my career as an auditor, which in a sense is perhaps a slightly unusual beginning for an investment manager. But with that in mind, once an auditor, always an auditor. So I want to tell you a story with that in mind about a real life challenge that we've faced this last year. So here we are as a diligent UN PFI signatory. We're wanting to commission our carbon footprint, and we use a number, not just one, a number of well-known suppliers in order to do this. And we get the results back, all excited, and quite immediately there is something that jumps off the page, in so much putting my audit hat on, about accuracy and completeness, two of the basic sort of tenets of a sort of audit training. First, the data is incomplete. So we send off all the investments in our fund. It's a multi-asset fund. And what we get back only covers 75% of the investments. Now, they are the ones that are covered are typically the equity. So that's the good news. There's been a lot of development in that space. The bonds, the investment trusts, and that sort of thing, less information, no information, in fact. Then you look at the covered stocks as far as the accuracy goes, and you discover that in a sense, it falls into three categories: full disclosure, partial disclosure, and modelled. And then, of course, even if the full and partial disclosure, are they all following the same rules in methodologies and things in order to create this? And sort of going back to earlier sessions, that doesn't even touch on things like carbon equivalency. So great, we've got these wonderful documents. We really want to share them with our investors, but it's incredibly complicated. We want to be transparent, but in order to be transparent, there are some big messages and complexities that need to go with it. It's not just one magic number. And indeed, as data improves in the years ahead, that might drown out other messages of improving footprints and things. So it's great we've got this, it's come a long way, but I really want to echo what Mark Manners said this morning. Really fantastic game changers here from the International Financial Reporting Standards, now forming this International Sustainability Standards Board. This is seriously exciting for us with audit heritage, because this means that, in a sense, we have got consistent data potentially coming one day when these standards exist, when they are consistently applied and potentially audited. But obviously it all takes time, but it is wonderful to know that that's out there and coming. So the future in mind, yes, what's measured gets managed. So yes, faster please. Yes. And then the other side of it is the footprint side of it, in a sense, not the footprints. The idea that savers want investments to consider the people and planet. We've all got this news hard and fast. There's this growing wave of consumers really interested in this sector, and it's moved away from the mainstream. But market force.
Oh, you've gone quiet. I can't hear you, Caroline. Right, Caroline, I can't hear you at all. Joey, are you able to interject and say whether or not that's the same for you?
Yes, I think this is from Caroline's end.
Okay.
I don't think she can hear
us.
Right, Caroline.
I don't think she can hear us either. Well, let's use the chat to communicate.
Yep. Okay. If one of you can pop something in the chat to poor Caroline. Sounds like she's had bad. We lost you there, Caroline, for a little while.
Where did you lose me? I'm sorry about that.
Probably about a minute ago, unfortunately.
Okay, well, basically it's the idea that market forces can't work perfectly if the IFA investor can't tell the good products from the bad. So we need Mark Manning's and those consistent definitions about what's green, what's sustainable, what's ESG, in a sense, so that we can compare apples with apples, and oranges don't get incorrectly labeled as apples, which would be the worst of all. Thank you. Sorry about the sound.
No, not to worry. This happens, the joy of Wi-Fi. Amanda, could I come on to you? So one of the other tools that people do tend to use and reference all the time And I see them as, you know, sometimes a double-edged sword. Whilst they're hugely useful, they bring challenges to the financial community. Could you talk on the SDGs? Because IFAs will be hearing a lot about those, and clearly a lot of people anchor to the SDGs, which makes sense. If you could explain the issues around those a little bit, please.
Yeah, sure. So for those who are not familiar, and I'm sure most of you are, the SDGs, or the Sustainable Development Goals, are a set of principles that were set up by the UN with civil society and governments to try and address some of the world's biggest problems by 2030. So they followed on from the Millennium Development Goals, and then this was meant to be the next 15 years of what we needed to focus on. Now, what's so exciting about the SDGs is that they are global in nature, that they capture all countries. They're not just focused on developing world. All countries face issues. We all face climate change challenges. We all face the fact that we're consuming at an unprecedented rate. We all face the real rise of inequalities amongst all of nations. So the SDGs are effectively trying to achieve, positive outcomes against these world problems. So they're colourful, consumers get them, they're easy to relate to. The challenge with investors is how you then translate that into an investable idea. And coming back to Caroline's point about wanting to make sure that you can compare apples with apples, a company that is doing something positive towards one of the SDGs might not necessarily be considered sustainable in some people's eyes. So for instance, if you are a mining company and you're digging holes in the ground, that could, for somebody with a real strong environmental view, find that unpalatable. Whereas that mining company could be operating very responsibly, generating jobs, helping build a community. So it will be ticking some of those SDGs, such as quality of work and creating jobs. But then the downside is, what is the negative environmental impact? So the challenge for us as investors with the SDGs is they were not set up for investments. They were set up for governments and civil society to embrace. But there's been quite a lot of progress in the investment industry to try and capitalize on how a company may be contributing to those SDGs. And what we have seen, which has been really encouraging, is large multinationals tapping into that and being able to align their businesses with positive outcomes. Ultimately, we all want to see positive outcomes from our investments. And the challenge will be how you create an investment portfolio that aligns with the specific needs of the underlying customer or the underlying client, because they could be quite different. So just taking that mining company as an example, some people will be like, this is great. We need to have natural resources as part of economies. They're operating in a responsible manner, creating jobs, creating economic growth in deprived areas, versus people who might be much more concerned about maybe the nature of the mining company. What are they mining? Is that contributing towards climate change? Miners mine metals that go into renewables, but they also mine coal that goes into coal-fired power stations. So the issues are not easy and they're very complex. And so what we need to be thinking about as investors is the ultimate impact of the investments we're making, from what business activity is that company invested in. And there'll be plenty of people that just say, I don't want exposure to that business activity, right through to what are the solutions that those companies are generating. So in generating an impact type proposition, you can measure your outcomes against the SDGs. And that's where it becomes quite exciting, because you can actually say, this is the contribution from business activities that these companies are making. But coming back to Caroline's point, that data is scarce. It's not auditable. It's not consistent. So it's very manual. And if you're running and you've got dedicated resource, like some of my colleagues on this panel do, to really understanding the complexities right down into the detail, great. But if you're reliant on external data providers or companies themselves to bring you that data in a consistent manner, that's where we're battling as fund managers at the moment.
Thank you. And Seb, can I ask you then to paint a picture of where we need to get to? And then after that, maybe I'll ask Mike to just touch on some of the big initiatives that we're seeing, and then we'll get a bit more granular after that. So Seb, if you could just paint a picture of, we've touched on this with biodiversity and climate change already, and also social issues, but can you just paint a little bit of a picture for where the end game is and the size of the challenge that we're facing here?
Yeah, I mean, I kind of was thinking about it more from the perspective of the audience here, the financial advisor. And, you know, I was reflecting, I'm old enough to remember a time when the internet was still novel. And, you know, at that point, there were businesses that were seen as being, you know, the internet was kind of their preserve. There were specialist businesses that that had business models that relied on the internet, and it was kind of you know, the newspapers had separate sections that talked about the World Wide Web and technology. Kind of where we've got to with sustainability, which is, you know, it's a enormous progress compared to where we were even 2 years ago, but it's still seen as a sort of discrete thing. You know, it's something that you might have a strategy that does this, and you might, as a financial advisor, you might have built a model portfolio for clients that are interested in sustainability. But sustainability it will affect everything, every sector. Climate change on its own will affect every sector, and sustainability more broadly will certainly do that. And, you know, I think rather like technology has now become just something that every business has to have a response to. It's part of their operations, it's part of the way in which they interact with their clients. And I think it will be the same with sustainability. It'll become embedded in every financial product. It won't be just a discrete thing for people who care, because it will be affecting every investment. And so I think that's where we will go. We're clearly not there yet, but I think we can begin to see that happening, as you know, particularly around climate, but it'll include all the issues that we focus on.
I think that's a really good way of framing it, talking about the internet. I'm going to pinch that, Seb, if I may. I know you've seen my sandwich analogy before, which I used in the introduction to this, talking about we need ESG risk mitigation, understanding risks underpinning absolutely everything in investment. We need responsible ownership on top, and you put what you like in the middle, because fund strategies will vary. I think that whole framing of this is just going to change the way everything happens. And we certainly need to stop people saying, oh yes, sustainability, that's an interesting asset class, which I can't bear. Mike, I wasn't originally going to come onto you on this, Mike, but if you'd like to, maybe you'd like to talk briefly, Mike, on some of the really big initiatives generally that are moving things at the moment that have helped bring about positive change.
Well, I'm going to do that, but not quite in the way we agreed before today. So I was deeply excited that Caroline was excited about the ISSB. That is very important, although won't touch IFAs directly, but I contributed to the first consultation when the IFRS thought they might do that. I'll leave SDGs till the last 20 minutes because they are incredibly important, as Amanda says. And I think Seb's point about this is mainstream actually appeals to the target market of IFAs, because in fact, all their clients over time will be interested in sustainability, because that's what that money's doing. And in fact, rather at this stage than talk about emerging initiatives, it might be sort of rather boring and technical, I thought about emerging behavior and just offer a couple of questions that IFAs might find useful before they are asked the questions by their clients. So the first question was, well, thank you very much, dear advisor, for telling about the carbon footprint of my portfolio, but could you tell me about the implied temperature rise of my portfolio? Now that question has probably not appeared a lot from your clients, but in the institutional world, those questions are arising. So if you can get ahead of the questions that your clients are asking, I think you will develop your business around this area. I'll give you one more and then I'll pass back to Julia. Thank you very much for showing these stocks in my portfolio. I thought this was a sustainable portfolio. Why do I have money invested at Exxon 2030 paper? And we can get on to the sort of divestment engagement discussion, where engagement is largely seen as an equity thing. But actually, in the institutional world, divestment is very much, let's begin not to fund the debt of companies that we don't want to fund. So just a couple of questions that you might get asked by your clients one day, so have the answer first.
Thank you. And I hope you're not stealing too much of your thunder for what you're going to be saying later on about how we need to change things.
I can talk for a long time.
I know you're hugely capable, and yes, delighted that you could actually make it this afternoon. So could I ask Seb and Amanda then to talk a little bit on the stuff that's coming over your desk, the new stuff. So we know the PRI. So the PRI has been really important. They've done a good job. They're raising profile things. And there's things like IIGCC, Climate Action 100+. You may want to reference those, but also new stuff, please. Maybe, I don't know, Amanda, would you like to start?
Yeah, I'm happy to kick off and give Seb time to find something even better to talk about. So for me, Julia, there are two really key things that I'm seeing across my desk. And I'm going to talk one about kind of a big thing for the whole industry, and the other is a topic, so emerging topics that, you know, the sorts of things that we have to start looking at as investors. So the first is regulation. Caroline's already touched on, you know, some standards and things like that. And SFDR, which is a European regulation, so doesn't capture UK funds unless they're sold in Europe, but actually is the first big piece of regulation that has come out on sustainability reporting and disclosure, and being able to categorize your funds into different types of sort of sustainability funds. Now, the reason this is important for UK investors is because the FCA has already done a Dear Chair letter to investment managers on this, and we will see something coming out of the Treasury, I suspect, in the near future on disclosure, how we're going to categorize funds. And what the feedback of the investment industry is, please don't just bring another set of regulations that is different from what we're already trying to grapple with. So I think hopefully what we will see for the end investor, which is really positive, is a clearer categorization of the type of fund that you will be investing in. The challenge here for us as investors, whilst this is trying to minimize and get rid of greenwashing, so greenwashing and regulation is the big topic here, it also is creating in what I'm slightly worried about is lowering the bar for what we who've been involved in this for a long time expect from a sustainable investment, because the regulation is very opaque about how you would classify things. So that's the first big thing. And then the second I'd like to talk about is actually some of the topics where, you know, we hear a lot about climate change, and we hear some stuff about human rights, and there's definitely a big focus at the moment on biodiversity. So these are the things that are sort of hot topics, but actually there's some also interesting trends that we as investors need to be thinking about, which is mainstream. You know, as Seb said, this is no longer something that sits over there. So one of the topics that we're currently looking at is the changing nature of employee activism, for instance. So, you know, when I used to look at employee activism many years ago, it was, what are the sectors that are most likely to face placard waving, poor labor practice issues? You know, because that's where companies were facing the sort of the strikes, my labor, I'm being treated badly as a worker. Now that hasn't gone away. And actually with the rise of social media and better access to understanding working conditions, that still remains a significant risk for low paid manual labor. But what we are seeing is a completely different set of expectations of employees for the companies that they're working for. And the biggest sector facing this is the tech sector. So actually, instead of being vocal, using social media and all of these other types of platforms, employees about their labor practices, they're very happy with their labor practices. What they're not happy with is what the company is doing, i.e. which relationships those tech companies have agreed, how they're managing or monitoring social media, how they're getting involved in the debate about equality, you know, and so what we're seeing is a much different type of employee activism, and that can create reputational issues for the companies who are investing in. And so they have to think about their purpose beyond, I'm just giving you a good job and a nice, they have to think about, what do we stand for? which are the organizations we want to be involved in, what are our employees expecting of us in terms of our culture. So I think that's just a really interesting dynamic of a change of complexities of some of the issues that investors are starting to have to think about.
That points to a whole different area, opens up a whole new area of questions, doesn't it? Not least, it's on the tip of my tongue. Very briefly, can I just clarify, UK or international or somewhere in between? Where are you talking about there?
What everywhere. So if you're a Facebook or a Google or even in China, we're seeing the government cracking down on sort of that kind of employee people being very vocal about the companies they work for, particularly if they. So this is an international, global issue.
Thank you. Seb, can I come on to you with this question then about what's coming over your desk? What looks good to you?
Well, I'll just continue along the same thread I think that Amanda started there. I mean, I think the point that I would make is that's true for financial institutions as well, including the ones that we work for. And I think there's a lot of focus, rightly, in a fund on what it invests in. And I think, as an aside, you should always be able to see everything that a fund invests in and the reason for that investment as well. But there's also, so that's sort of a given, really, that we should be investing in businesses that have a positive impact. But there's also, what does the asset manager also bring to that? What is the impact of the asset manager over and above what is the impact of the assets that they're investing in? The role that our businesses can play in, lobbying for higher standards, in working collectively to signal to the market that it's unacceptable to have certain types of business operations or business standards. I think there's more that we can expect of asset managers beyond what they're investing in. We should be looking to see real commitments from the asset managers as well. And those commitments shouldn't just be around policies as well. I mean, my problem with the PRI, we're obviously signatories to the PRI, but it doesn't really focus on performance. And I think more and more we're seeing a shift to focus on, well, what does the delivery look like? And one initiative that we're really pleased to be part of is something called the Net Zero Asset Manager Initiative, which in order to remain a member of that, you have to you have to report on the reduction in carbon emissions associated with your investments in your portfolio. So it really requires managers to engage with the companies that they own to get them to reduce their emissions. And if you're unsuccessful in that, then you can no longer be part of that initiative. And I think that focus on performance, it's critical. I think we've had enough of policies. Now let's see what the performance is like.
So you're talking environmental performance there, Seb, aren't you?
That's particularly around climate, yes. But a lot of the most advanced initiatives tend to be around climate at the moment.
Mm. Okay. Thank you. Caroline, was there anything you wanted to add into that at all? Or shall we?
Only that nothing alone, in a sense, can solve it all. It's a sort of combination, isn't it? And that is sort of getting traction now, which is great to see.
Yes, indeed. Yes, and people are beginning to understand the complexity of all this. Just to say, so on Fund Eco Market, our database, you can search on that for net zero asset managers, people who signed up to the initiative. You can look for people who've done their calculations on implied temperature rises, that kind of thing. These are filters that virtually never get used on our site. We are completely redesigning it to make it easier for people to find stuff, which will come through in due course. But this stuff is coming your way, which is why we started tracking it all a year or so ago. So in terms of other sort of what's new initiatives, I think Net Zero Asset Managers Initiative, certainly all the net zero stuff is hugely important. Mike, do you have other areas that you'd like to add into that?
Well, no, I was going to emphasize some of the points the panelists had made and hopefully sort of build on them. So I think to the Net Zero Asset Managers Initiative, which doesn't easily condense to a 5-letter acronym in Zami, I think, IFAs asking tough questions of their managers, are they a member? And there will be some evaluation. Sitting above that initiative is GFANZ, which is a 5-letter acronym, which is the Glasgow Financial Alliance for Net Zero. And there are asset owner, investment manager, insurance, and other initiatives. And one of the things that will come out of COP is likely evaluation of signatories' progress along the pathways of those initiatives. So I encourage, to IFAs to think about how they can evaluate those who they're placing their clients' monies with. I loved Amanda's point. If you want to look at this, we all know that there was an interesting Facebook employee testifying in front of Congress yesterday. That is a sort of key data point. And if we head across to Australia, we've seen how, the tech companies are beginning to engage around government and, how much freedom the tech companies have to operate. I think Amanda's highlighted a very important point. If you want to learn about this, I recommend The Age of Surveillance Capitalism by a lady called Zuboff. We talked about that. So I think there's lots of things going on. And I think one of the things I encourage people to do is to slightly spread their wings. And when there's a topic that interests them, go down that, it may feel like a rabbit hole, but actually is a piece of what's coming your way.
Even better when I'm unmuted. So yes, absolutely. There is a lot going on here, and there are so many different things that companies have now got to take into account, all of which can hit the bottom line and drive financial performance south, shall we say. So yes, loads of issues, and of course with it driving performance down, of course that brings us on to the next point, which I think we've touched on it a few times today, but we were going to cover it in this session. Given all of this, given all these initiatives that are taking place to try and change things, of which we will hear more from Mike later, divestment, Caroline, what role has divestment got to play in all of this?
Well, I guess divestment, especially with relation to fossil fuel stocks, has become, in a sense, a movement. It has almost like they're the new sin stocks, and we're getting clients increasingly, they come in, used to be just the sort of things like the environmental charities or the religious organizations, but now your mainstream traditional middle of the road client is saying, oh, I don't want to be invested in fossil fuels anymore, and that drives them into the sort of the positive solutions based options, including our fund. However, as we all know, as that sit here today, that is only a very part of the story, because in a sense, divestment, unless we literally starve these businesses of capital, which is going to take a very long time, sadly, in a sense that alone is not going to solve the crisis. And it only sits at one end of the spectrum of possible investor actions. And it also presents a danger that the environmentally aware investor actually loses their voice at the table and influence over the company. But what divestment has done is it shift the conversation, because it's being talked about so much. People are thinking, oh, shall I divest from fossil fuels? It has empowered others, in a sense, to act, to be the active owners and to act with intention. And in a sense, the wider part of our businesses are learning now that effectively the fossil fuel businesses without a transition plan don't have a future. So there's some really interesting engagement going on with management, which I think has started by the divestment movement, but actually as it is not the only answer. So we need to drive some change with some open, honest conversations with senior management at these companies. And actually the worst thing we can do, we either don't own them or we own them and engage, but what we absolutely must not do is own them and not engage and not participate in these conversations.
Well said. Very, very nicely put. Yes, too right. Thank you. Now, can I, in fact, I'm going to say a couple of things just before we start to close. But one is to say we've got Mike speaking next, and then we're going to go on to doing an informal chat room, which obviously I would love everyone to stay on for. So fund managers, Mike, just informal conversation at 5 o'clock if you can possibly make it. And then also to say we do have our drinks session, so end of Good Money Week drinks next Wednesday in London for those who can make it. So information on Fund Eco Market site and UXIF site, because we're collaborating on that one. But can I ask you all to close, and probably a few sentences each, we've got a few minutes, bringing together some questions I had put as draft questions. So what your hopes are for COP26, and if you had a magic wand, what would you make happen? So if we can bring those two together, perhaps Seb, could I start with you on that one?
Yes, thank you. Yeah, very quickly, two things. One of your previous panelists made the point that current company commitments would take us to 16% increase in carbon emissions by 2030, and we need to see a 50% reduction. I would like us to see more ambitious country commitments that take us at least some way towards that 50% reduction. We've also got a massive gap to close, but I think more ambitious commitments from some of the emerging economies, Brazil, Australia, Russia, that would be enormously helpful. And then a magic wand, I would say a meaningful carbon price. I think if we had a meaningful carbon price, we wouldn't have to worry about taxonomies, and I think it would just solve so many problems. But I worked in Brussels in 1994 on the 12th iteration of a carbon price in 1994, and we have a carbon price now, but it's becoming meaningful in Europe, but that's just in Europe, and we need it globally.
Thank you. Caroline, can I come on to you with that question?
Starting with COP26, it's the clear pathways, and in particular, having short-term targets that actually are so short-term that they fit within the term of political parties actually being in power. So the problem with the climate situation is it's decades, and we need stuff that's like a target for 2 years or something, or 4 years, but not so far into the future that they can't be held to account. And on my magic wand, I'm afraid my auditor history prevails here, and I want one set of global metrics, one set of global standards, great data, and a magic wand to speed the whole thing up.
Well, I'll click my heels together for you and we'll make it happen, right?
Thank you.
Mike, can I come on to you briefly for this one?
Sure, I'll deal with divestment in the later thing. I'm going to have a magic wand for the investment industry, is to realize that ESG is not a thing. ESG is not a noun. ESG is an adjective that should only be used with the noun risks. Investors deal with risks. ESG is a way of thinking about risks. So anybody who treats ESG as a thing should probably put £5 in the sweat.
Cool. And Amanda, can I come to you next, please? Yeah, thank you. So on the COP issue, I think it's really important. I'm speaking as an asset manager. There are two things that will make us shift capital. The first is a political regulatory framework that makes business and everybody change the way they do things. And we as investors cannot operate unless we've got a very clear direction of travel from governments to address climate change. So the first is a clear regulatory, and we've been asking for this every COP year after year. The investors sign, give us clear regulation. So I want countries to sign up and actually create regulation and a direction of travel that makes it easier for us as investors to allocate our capital in a financially beneficial way. The second is the ask from the asset owners, because I am there to represent my end clients. And as much as I would like to take radical action in terms of allocating my capital in a way that I think will be in the long term beneficial for the world around us, we can't do it without our clients encouraging and asking us to do that. So clients signing up to net zero, putting their own commitments, that will make asset managers move, because we are there to manage money on behalf of the end investor. And so this, from an IFA perspective, is don't forget, it's not the institutional investors that have the voice. It's the person on the street. It is the person on the street that holds assets in these companies. The institutional investors are there to represent the end investor. And that's where the IFAs are massively powerful to think about what they can do to get their clients thinking about how they want their money to be allocated.
Hear, hear, well said. And
Amen.
can I throw in, having always talked to IFAs all my life, please don't expect your client to come in and ask you questions about this because they don't understand investments. It's actually your job as an advisor to tell them how important it is. And I know all those people who are on today will know that, because you wouldn't bother taking a day out of your lives, your busy work schedules to do this if you didn't think like that. But the more you can spread the word on that, just advisors understand the importance of the role you play in this. So I'll say a huge thank you to all of you for speaking on this panel. And can I ask you all to stay please for a moment while we pop up 2 very quick poll questions. So if
we're disabled from responding to this. Yes.
I am not sure. Joey?
No, we are. It tells me that.
I'm afraid only the attendees can respond.
I think we've got some pretty clear signals there, guys. People are either yes generally or sometimes interested in this stuff, but I don't think the message is getting through from fund managers. Obviously, a big part of what I do in Fund Eco Market is to try and get stuff out to people, but as a general demand for information. So these are people who know their clients are interested but aren't getting enough stuff. I think that's a big message to take to all the investors. Do I have any other comments, or would any of you like to comment further on that? Please just jump in.
I think that's great. That's really great that they think that advisors think that about their clients. I wasn't sure that the answer was going to be yes. So
nor was I.
Yeah.
No, I was just I was sometimes a no. So that's
Okay. So Caroline or Amanda, any quick comments, or should we call it a day?
No, I just think that supports the fact that the investment industry really does need to up its game in terms of its own transparency and helping explain what they do in a very easy manner for the end investor, because it's often very complex. And
it supports you, Julia, to run more panels like this.
Yes, I do need to. Yes, absolutely. I will do. We're when the new website's up and live, I'm going to have a proper booking system for running events. That's one of my high on the list things. So then once I can get scheduling it in, people can just pick those things they're interested in. So absolutely on my agenda.